Good morning, traders. It's Wednesday, April 3rd. Taking a look at the charts. Equities are down a little bit again today. Overall, we've had a little bit of fear and panic yesterday, so it's bleeding over into today simply because a lot of people work. A lot of people don't follow the news throughout the day. And of course, they get home, they look at the news, they see stocks down, they see Tesla and some of the big companies down, and it spooks them. So they put in orders to get out today at the open or early this morning in pre-market, and it continues to make the market move lower. Now, the market is set to gap a little bit lower this morning. Again, we like gaps down. We like a bit of panic. We like a little fear in the market because that typically means the shares are changing hands from people who are weak and nervous and scared they're dumping those shares into investors who say, I like this price, give those shares to me and I will hold on to them and support that stock price because I'm not selling them. And then the market goes up. So when we take a look at the daily chart here, we can see we've been running up this pink line, which is the 20-day moving average. We're back down to the 20-day moving average. If we look at our 30-minute regular trading hours chart here, you can see the pink line, which is the 20-day moving average overlaid on the 30-minute chart. And these lime green areas are when the market technically get very short-term oversold. And so we had that yesterday. We were spiked up over 3 in the morning, but by the time the 30-minute bar closed, we fell back below the panic selling threshold. But overall, the market had a big gap down. It's set to gap down again today towards that 20-day moving average. And to me, this is still, the markets are slowly getting weaker, but overall, this is still a bullish sign at this point, and it's just an oversold level, people panicking out. The crazy part is we actually hit new all-time highs on the S&P 500 the day before yesterday in pre-market. We're touching new all-time highs, and then one little pullback and everybody jumps ship and freaks out. We've talked about this many times. We had it over here. The market had a big pullback after hitting new all-time highs. Pretty much has done it each time, over here and over here, all of these really. But it's amazing how sensitive people are. They think we hit new all-time highs yesterday, for example, and then today pulls back and they think the sky is falling. So it just goes to show how sensitive, hypersensitive everyone is, which is good because that means the market's generally going to want to keep climbing up this wall of worry and go higher. Now, overall, if we take a look at what money's doing today, it is flowing out of stocks. Let's take a look at the Russell 2000. Russell 2000, sharp pullback 2 days back to back. In the grand scheme of things, it is right up into this previous high from back in April of last year, so a year ago, and all of these lows, this topping phase. So definitely we're seeing small caps run into resistance. That is not a good sign. I think Tesla, let's take a look at Tesla real quick. Some of these heavyweights are not looking very good. We'll probably touch on these in the mentoring session. Overall, lower highs, lower lows. It's had a drop and a bear flag. It looks like it's ready to go even lower. If we look at Apple shares real quick, it is on the verge of breaking down from this potential double top phase here that if it starts to break down, it could really be a precipitous fall as well. Tesla has a very similar setup. Let's take a look at NVIDIA just because everybody seems to own it except for me. It has got potentially a little bit of a double top, but it is holding up very well, holding up above the 20-day moving average. And really, in the grand scheme of things, this is a super strong rally. And this, at this point, is nothing more than a pause and consolidation that is pointing to potentially higher pricing, much higher pricing. If this pattern was to play out, we're looking way up there, like $1,500 a share for NVIDIA. But I'm not saying that's going to happen. I'm just saying this could be a double top, or it could be a massive pause and NVIDIA just keeps on trucking and going higher. Now, while I think the AI space is kind of overdone, short-term wise, the fundamentals, and I'm not a fundamental guy, but I've talked to a lot of people about this, and I believe it as well, is the AI space it's being squeezed and thrown into everything, including toothbrushes now. It's absolutely ridiculous, in my opinion. but it's still the infant stage. It's unlimited at this point in my brain of how big this space can be. So there could be one sector or one group of stocks that continue to do very well, even if the stock market struggles and everything else goes into a recession and decline. The AI space could be that. But it might hold its ground and maybe not rally while the stock market falls. So it might not extend higher, but just kind of wanted to mention that there is, I think, a ton of potential in AI. I do feel it's overdone, but overall, it is a new space in the world that is got a lot of potential. Let's take a look at some of these defensive plays real quick. Utility stocks moving up a little bit there yesterday. They are set, they're primed and ready to continue to push higher. They've been holding up. Again, people are nervous, so they're moving into these defensive plays. Consumer staples pulled back over the last couple of days, but overall, as you can see, a nice, strong trend to the upside. Healthcare, it had a big pullback there yesterday. Now, yesterday was a wave of panic selling, so pretty much everything got hit. The only thing that kind of bucked the trend was actually gold, silver, and miners, and they continued to push higher. We got gold breaking out here. We've got silver posted some pretty big gains yesterday, really popping and extending above this high that we saw back in last December. So it is really starting to pop and push and showing signs that it is starting to break out. It's broken all of these highs except for these ones back about 2 years ago. Overall, a very strong sign that the precious metal space is coming to life. And this is no surprise. We've talked about this. Gold broke out a long time ago, and now we've been waiting like, are the miners and silver going to follow suit? They're finally starting to follow suit. Let's take a look at GDX. GDX starting to break above this high right here. So that is a good sign. If we look at silver miners, they are right up at resistance, haven't fully broken out yet. But again, all these things are coming to life. Gold's leading the way. But we are seeing the miners come to life. And of course, the energy space stocks are doing very well, ripping higher. They're set to open higher again today. When gold and oil related things rally and do very well, especially if the stock market starts to sell off and they keep going higher, the precious metals commodity space, that is a huge red flag that we are close to a recession starting, a massive bear market. So let me show, this is going back to 2007, 2008, 2009. The top chart here is the SP 500. It put in a top. We had more or less a top here, and then it put in a nominal, a little bit of a higher high, and then we started in this 50+% correction in the stock market. Now below here is a chart of gold. Gold here had a kind of a multi-year consolidation through here, which is what we've just had with gold. We just had a multi-year consolidation. And then what we started to see was gold starting to run up, created a nice little pennant or formation, which is a halfway point, ran all the way up, kept pushing higher into this level, while the stock market more or less put in a top, even pushed to a nominal new high, and the stock market started to sell off in a big way, yet gold, silver, miners continued to push higher. And so this is where I think we are. I think we're somewhere where the stock market is on its last legs, about to roll over. And even if the stock market rolls over now and starts to sell off for several months, I think gold, silver, and miners could continue to hold their value during some selling pressure and then continue to move higher as that defensive play. And then eventually when we get into, once the market is completely broken down and it really starts to break down into a stage 4 decline, which is the massive bloodbath and massive pain and full-on economic recession, that's when gold really starts to get under pressure and will really get sucked down with that. But we typically are going to see gold, silver, and miners bottom months and months before the stock market does, and they will start to move up and rally. We saw this after the tech bubble. The precious metal space bottomed months before the stock market, and it started to rally and take off. So that's kind of the view of where we are. I think we're somewhere like right here. We're kind of like right here. Gold's already started a first run. I believe it's got a big push potentially to 2,700 as the ultimate rally up while the stock market tops out. So let's go take a look over here right now. We'll just... If we take a look at this chart, I believe the stock market is very close to putting in a top. We've already got, we've had this kind of more or less this multi-year, well, it's not very straight, but multi-year consolidation in gold. Now gold is really starting to push up and run higher with the market. And if the stock market starts to stall out and starts to roll over a bit here, we could continue to see gold move higher and continue to hold its ground while the stock market starts to put in a top. And then eventually, when we start to see the stock market go into a huge correction, it will naturally pull gold down with it to some regard. So that's kind of my take and the view on kind of gold in the markets. That view hasn't really changed in a long time. But let's take a look at the rest of the markets here. Let's go take a look over at let's take a look at the dollar index. The dollar index tends to do well during times of uncertainty, times of massive panic selling. It has been moving up. The stock market participants on average are getting nervous, and the dollar is going up. I believe the dollar will continue to push. We have seen the dollar and gold move up together this week. And that is just telling us people are nervous. And the dollar index is holding its ground. If we go take a look over at energies real quick, obviously energy sector stocks are ripping to the upside. Crude oil broke out of this base right through here, and it is continuing to extend higher. Again, this is kind of one of those last warning signs that energy commodities are doing well, and the stock market is probably getting a little frothy to the upside. Other than that's kind of about it. Let's take a look at the hot list. Overall, we are long XLP. Let me see if I can find it on this list. XLP continues to just kind of work its way up. Series of rallies and pullbacks, typical type of price action. Yesterday was some pretty high volume selling. There was some high volume selling in the stock market, panic. And of course, panic, fear is okay. A little bit of fear means these defensive sectors can keep going up. But when there's panic selling, people just start to dump everything. And that's when we get higher volume. And that's when even defensive plays can get pulled down. And that's kind of what I think took place yesterday. Overall, we are long SSO. We're up about 35%. We're long QLD. We're up about 35%. And our XLP position is up like 3 or 4 or 5% or something like that. We're just letting this market continue to mature. There will be a point where this market breaks down, rolls over, we get out of the trades. We will give back some of the gains that we have. That's the way trading is. You can't always get out at the best near the highs. But that's just kind of how it goes. If you try to pick a top in this market, which a lot of people have been doing, you would have been out a long time ago. And you could have even been on an inverse play or betting on the downside, and then you've lost a bunch of money. So by letting our positions run with the trend, because we never know if it's going to last 1 week or if it's going to last 1 year. So we just have to let it keep doing its thing, and we just know we're going to give back a decent chunk of those gains at some point. But in the grand scheme of things, it works out very well if you follow the trends and just manage positions. So that's about it at this point. We're just going to let the market keep doing its thing and go from there. Talk to you soon, guys. Bye-bye.